What is up, everybody? Welcome back to the Crypto Sherpa Show, where I cover the latest cryptocurrency news articles to keep you up to date on what's happening. And happy Friday! It's Friday. We made it. It's the end of the week. And for those of you in Sarasota, stop by the club. We're here to help you with any crypto need your hand, whether it's just getting started, you need a wallet, you need to know where you can buy and sell it. We got you covered. Don't be going online trusting these people like in your WhatsApp, Telegram channel. Those are mostly scammers claiming to be crypto experts. So don't fall for those scams out there. I see it all the time here. People coming in, oh, this is happening. Can I help me move my money? And I take a look at it. It's like, that's a view only wallet. Who told you to get this? How'd you put the money in there? They tell me their story and it's like a no. So guys, don't go online for that crypto help. If you need help, join one of our clubs. We have many locations. We have here in Sarasota, we have Nashville, Tennessee, we got Leominster, Massachusetts, Plano, Texas, which is our Dallas club, and Las Vegas, and many more coming down the road. So we're here to help you guys, and we're going to be popping up really soon. But yeah, let's go Bitcoin. Woo! If you look at the charts today, like literally in the last hour, Bitcoin shot up from 112,000 all the way up to 117. We're currently at 116.5. And this definitely has to be because of Federal Jerome Powell speaking, saying we may have a rate cut coming in September. Yeah, Powell says conditions may warrant rate cuts. Here we go, and we are definitely seeing it. What else about the rate cuts? Is it going to happen? Like if there's a speculation if it's going to happen, people are going to vote on it. And looks like odds of the Federal Reserve lowering interest rates in September fall to 57% according to crypto prediction market, Poly Market. So this is our crypto betting platform out there. And during the election, there were so many just people betting on just like who's going to win the election. Is this going to happen or is not? So people will bet on anything. But on that side, the average day Joe, everyday people who are using that site, they believe it might not happen, but we will never know. We got to just wait and see if we are going to be getting Uptober or Rectober. Yes, ChatGPT finished my image, right? So like we always have these two narratives coming in October. So if we do get a lower interest rate cut, then that could lead us into Uptober, because let's see, why do rate cuts why are they important, or why do they pump the market? Well, because rate cuts are usually cheaper for borrowing. So when the Fed or another central bank cuts the rate, money becomes cheaper to borrow, more liquidity flows into the system, often pushing toward riskier assets like crypto and tech stocks out there that can cause a pump. Now, with rate hikes, this causes expensive borrowing. So higher rates pull liquidity out of markets, and investors prefer safe yields like bonds or treasuries, leading to crypto dumps out there. But I think people are going to change their mind soon. Still seeing Bitcoin not as a risky asset, but the other cryptos out there, yeah, those would definitely be a little bit more riskier. But yeah, and then rate cuts also showcase like the dollar strength. If we have lower rate cuts, usually that weakens the dollar, but a weaker dollar means a stronger and higher Bitcoin price. But when higher rates are usually strengthened, or when we usually have higher rates, then that strengthens the dollar, which pressures crypto down. And then it helps against inflation, market expectation. So that is why people are so focused on these rate cuts out there and why it's affecting the market. So that's what's taking place. And then what else do we have going on? Looks like the El Salvadorian education minister, Carla Trigueros, celebrates the graduation of female students from the Bitcoin program. And the Bitcoin country is winning. So yeah, they have the Bitcoin, or my Premier Bitcoin, the educational courses, and they're citizens. They are learning about Bitcoin, and that is awesome. And yeah, she is celebrating the women of crypto coming in, and we do need more ladies in crypto. They are popping up. We have Amanda here. We got Janet as our chief marketing officer in Nashville. It's like we have Heidi Carlson. Such smart ladies. We need more of them, and I love seeing this news because yeah, we're getting more on board. So way to go, El Salvador. Now let's dive into the actual crypto news. The articles I'm going to be covering, just reading through for you, and it's going to take us to some crypto adoption on the Philippines bill to chart a path to a strategic Bitcoin reserve with 10,000 Bitcoin. So this is going to be like a 5-year plan, and that could push them above El Salvador's Bitcoin holdings if they follow through with it. But do they add to account that El Salvador adds 1 Bitcoin a day to their balance sheet? So who knows if they account for that. But let's go through this article to hear a little bit about this new strategic reserve in the Philippines. So the bill would require the central bank to buy 2,000 Bitcoin annually over 5 years and hold the asset for at least 2 decades. So again, just making Bitcoin even scarcer if they do it by just holding it for that long haul. Now, the Congress of the Philippines is weighing in on a proposal that could see the country's central bank establish a strategic reserve of 10,000 Bitcoin positioning, 10,000 Bitcoin. And this would position the country among the first in the Southeast Asia to adopt a Bitcoin as a strategic asset. Now, a House of Representative bill filed by Cameroon's Sir Representative Miggs Villafuerte in June made headlines on Thursday as it aims to mandate the Banco Central NG Philippines. Now, the country's central bank to purchase 2,000 Bitcoin annually over a 5-year period. The bill is called the Strategic Bitcoin Reserve Act and aims to mandate the BSP to buy 10,000 Bitcoin worth $1.1 billion at the current market price. Now, the bill states that the asset would be locked in a trust for at least 20 years, and this would mean that the coins could not be sold, swapped, or disposed of except for when retiring government debt. Now, the representative deems it a vital for the Philippines stockpile strategic assets, such as a Bitcoin, to serve important national interests, such as providing financial stability, among others. Villafuerte wrote, adding that it's imperative for Congress to write new laws aimed at diversifying the country's assets to ensure financial stability. Now, here is the Philippine lawmakers' proposal of the Strategic Bitcoin Reserve Act, and this was a source from the Philippine Congress. Now, Bitcoin Purchase Program. A, the government shall establish a Bitcoin purchase program in which shall include the following: purchase no more than 2,000 Bitcoin per year over a 5-year period for a total of acquisitions to 10,000 Bitcoin, conduct purchases in a transparent and strategic manner to minimize the market disruption, hold Bitcoin acquired under the section in the Trust for the Philippines as provided in this section, and establish a procedure to adjust the purchase schedule set forth if necessary based on prevailing market conditions. So this is actually pretty good. This would get, if they do it, this would give us, again, give me more news articles to cover, because I'm always going, and again, Michael Saylor bought more Bitcoin, and again, Metaplanet bought more, and soon we might be seeing again, and again, Philippines just bought some more Bitcoin, adding to their stock part, and that's just going to continue on that narrative. I'm going to be in so many articles where it just be like Twitter ads just going up. Here's a post saying this country did that. Oh, this state did that. So eventually I just won't be covering the articles like this one of just them adding to it, because we know what they're doing. They're stockpiling it. Bitcoin's price is going to keep going up, and they're going to continue doing it. So that's what's going on with the Philippines. But let's continue on with the article. It continues on. The Philippine bill proposes Bitcoin purchase program. The lawmaker described Bitcoin as digital gold, citing its annual rate of 40% over the last 5 years and its recent all-time highs. Now, he said the Philippines must cash in on the increasing role of crypto in global markets, pointing toward El Salvador and other nations already exploring and implementing Bitcoin reserve strategies. Now, the Strategic Bitcoin Reserve Act would mandate that the central bank implement a Bitcoin purchase program. It would mandate that the BSP to hold the asset for a minimum of 20 years before deciding whether to keep holding or sell it. It would then also require the central bank to have a proof of reserve system. This would compel the central bank governor to provide publicly available quarterly reports on the Strategic Bitcoin Reserve that include information on holdings, transactions, and control of the private keys, because you do want to know who controls that, because in crypto, whoever holds your private keys holds onto the crypto. So that's why we always say, don't leave them on exchanges, or when your bank starts offering it, don't leave it there, but keep self-custody of it. It's great that they're offering those positions now, just making it a little bit lenient, because you won't be stopped at the bank side when it's going, oh, I want to buy crypto, but the bank was like, no, you can't do that. So it's going to be, so it's nice having them offer the ability to do it, because now that's just going to show that they're being less restrictive on crypto, Bitcoin, just all of that. But again, still as always, the number one rule in crypto is self-custody. So hold on to your private keys, put it in a self-custody wallet, and you are set. You don't have to worry about relying on the bank to keep your money safe, because that's just a false narrative right there. They're promising to keep your money safe, and they say your money, but the moment you hand over the money to the bank and put it in your bank account, it's not your money anymore. So yeah, that's actually funny when I just heard that saying it. But let's continue on. So the Philippines can surpass El Salvador's holding with 10,000 Bitcoin. So if approved, the bill could push the Philippines above El Salvador and near Bhutan in the Bitcoin holdings. El Salvador, a country that buys Bitcoin daily, has a total of 6,276 Bitcoin, according to its Bitcoin office. And meanwhile, the royal government of Bhutan has 10,565 Bitcoin, worth nearly $1.2 billion, according to the Arkham Intelligence data in this chart right here. US and China are definitely in the lead. Then you got the UK, Ukraine, and then we see Bhutan and El Salvador, and there'll probably be more countries adding into with their stockpile, because again, we keep getting more and more news about, okay, here's a secret reserve, and then once they actually approve and start buying it, oh, I want to love seeing those charts. But let's move on to our next article. Stick with the Asian countries out there, because look like wealthy Asian investors are targeting 5% of their portfolios in crypto as adoption broadens. So family offices across Asia are boosting its digital asset exposure, driving new crypto funds, exchange activity, and shifting adoption beyond just retail-led growth, which is great. Now, wealthy families and family offices across Asia are increasing their cryptocurrency allocation, with some planning to allocate around 5% of their portfolios to the asset class. Now, Reuters first reported the trend, which noted a wave of demand from high net worth individuals across Singapore, Hong Kong, and mainland China. Wealth managers told Reuters that they are receiving more inquiries from clients, while cryptocurrency exchanges have reportedly rising trading volumes and new crypto funds are drawing strong demand. Now, Jason Huang, founder of NextGen Digital Venture, said that his company raised over $100 million in just a few months for a new long-short crypto equity fund launch in Singapore in May. His previous fund, which wound down last year, returned 375% in less than 2 years. Now, UBS, the Swiss investment bank, noted that some overseas Chinese family offices are behind the shift, pointing to crypto allocations of around 5%. The bank said second and third generation members of family offices are beginning to learn about and participate in digital assets. So nice, the family is actually getting educated on crypto. Now, cryptocurrency exchanges in the region have also reported more activity. Hong Kong's Hashkey exchange said its number of registered users rose 85% year on year by August 25. And while data from CryptoQuant showed trading volume at South Korea's three major exchanges were also up 17%. So far this year, with average daily volumes climbing more than 20%, things are going pretty good. Now, Asia's crypto boom has been retail-led until now. So has it? It really feels like it really, has it been retail? It's like, it doesn't seem like this is the retail market. Like when I expect retail being like the high demand of crypto, I'm expecting the bull run of altcoin season to have happened. That's when it's really like retail. But as far as I know from all the news I cover, like all this crypto boom has been institutions, countries and governments, and high value clients out there. So retail is still, they're trickling in. They're in it. I see it every day when people come in, like the average Joe and Jay, they're getting in it too, but not as fast as the bigger players. But until now, Asia's crypto boom has been driven from the bottom up. Chain analysis data shows that the Central and Southern Asia and Oceania regions saw more than 750 billion in inflows between mid-2023 and mid-2024. That's about 16.6% of the global volume. Now, the inflows were powered mainly by retail users making transactions under $10,000 for trading, remittances, and decentralized finance. Now, in the 2024 Global Crypto Adoption Index from Chain Analysis, India ranked first worldwide, with retail investors driving activity on centralized exchanges. Indonesia placed third, driven by grassroots DeFi participation and a fast-growing Web3 sector. Now, Vietnam ranked fifth with adoption spread across both centralized platforms and DeFi, and the Philippines came in eighth, where crypto is widely used for remittances and play-to-earn gaming. Singapore has also emerged as a hub for crypto payments. Chain analysis data show that merchant services in the country processed nearly $1 billion worth of cryptocurrency in the second quarter of 2024, with stablecoin transfers widely used for the retail level transaction. But East Asia has been telling a different story. The region added nearly $400 billion over the same period, with activity shaped more by professional and institutional investors, and in some cases by wealthy citizens using crypto as a store of value. Now, South Korea received about $130 billion in crypto, making its region's largest market. Professional traders drove much of this activity through altcoins and stablecoins, and with arbitrage strategies tied to the kimchi premium. And for like the arbitrage strategies, if you're wondering what that is, basically they're just like buying a crypto on one platform that is a lower price, taking it, sending it to another platform which has that same coin at a higher price, selling it there. So that's how people usually utilize arbitrage trading strategies, and they were using the kimchi premium for this in South Korea. Now, Hong Kong posted the region's fastest growth, with activity up 85.6% year on year. More than 40% of inflows came from stablecoins, while approval of 3 spot Bitcoin and 3 Ether exchange-traded funds in April spurred institutional flows and shifted toward direct Bitcoin and Ethereum holdings. Now, here is a chart of cryptocurrencies valued and received by Eastern Asia compared to the rest of the world. So about 8.9% the cryptocurrency was received in the Eastern Asian area. So that's quite a bit. That's, what is that? That's 8.9%. They gave me the number right there. So that's huge. In China, activity shifted to OTC and peer-to-peer platforms after the 2021 crackdown on exchanges. Wealthy citizens have increasingly used crypto to preserve assets and move money abroad. with flows rising in late 2023 as the property market weakened and stock indexes fell. Asia also accounts for 32% of activity, crypto developers, according to the 2024 Electric Capital Developer Report. That's up from 12% in 2015, with 41% of new crypto developers now originating from the region. So, yeah, Asian investors have been booming in this region, and these are just the numbers showcasing that for you. So that's basically the Bitcoin, Asia crypto adoption. This is really what's going on around the world with crypto adoption. Now let's move into at least what else are we going to be covering? I have quite a bit of news articles to cover. I'm debating if I want to do this one, do an ad or not. Let's see. What should I do? Hello, Joe from California. Good afternoon to you. Thank you for being here. Should I continue on 2 more articles before we move on? Let's just do this 1 more article, and then we'll take a quick commercial break. So our next article is going to be covering SharpLink Gaming approves a $1.5 billion stock buyback to boost this Ether treasury holding. So Ethereum might be doing a nice little pump going on. Let's see. SharpLink Gaming, the second largest Ether corporate treasury with $3.14 billion in Ethereum, approved another $1.5 billion stock repurchase program. Now, SharpLink Gaming, one of the largest Ethereum corporate treasuries, authorized a $1.5 billion stock buyback program. In a Friday announcement, SharpLink Gaming said it authorized the repurchase of a $1.5 billion worth of shares as part of its disciplined capital market strategy. No purchases have been made so far. Now, the firm's co-CEO, Joseph Chalom, said that the firm will consider buybacks when its stock trades at or below the net asset value of its Ethereum holdings. Now, this program provides us with flexibility to act quickly and decisively if those conditions present themselves, Shalom added. Now, SharpLink's strategy focused on accumulating and staking Ether to boost its Ethereum per share metric. Now, repurchasing shares below net asset value would increase that ratio, the company said. Now, SharpLink Gaming is all in on Ether. I hate when they just say Ether. Like, call it Ethereum. It's Ethereum. But the betting platform transitioned to an Ethereum-based corporate treasury strategy and nominated Ethereum co-founder Joseph Lubin as chairman in late May. And at the time, the company said ETH will serve as the company's primary treasury reserve asset. So they took on this different strategy than MicroStrategy did by holding Bitcoin. They're going all in on Ethereum. I wonder if they do have some Bitcoin. I never actually found out this. They're so focused on Ethereum. That's all we get in the news. But in early July, Lubin went so far as to say that Ethereum treasuries are crucial for the development of the Ethereum ecosystem. He said that such companies are a great business to run, but also explained that it's going to be critical to enable the supply-demand dynamics for Ethereum to right size as we build more and more applications. Now, despite close ties to Ethereum ecosystem, SharpLink does not hold the industry's biggest Ethereum treasury. According to the Strategic Ethereum Reserve data, that spot is held by former Bitcoin mining focused company BitMine, with its 1.5 million Ethereum holdings worth $6.47 billion at the time of this writing. So SharpLink isn't the biggest holding, and they've been acquiring it, but they're part number 2. But SharpLink Gaming holds 740,800 Ethereum, and that's less than half of BitMine. SharpLink is also currently standing on an unrealized gain of nearly $600 million after Ethereum's recent price gain. Now, here's their buying chart since they started in June 15th. They added 176.3 thousand Ethereum. Then on June 29th, they added another 12.2 thousand. On July 6th, 9.7 thousand. So they have a huge, nice little accumulation going. And now on August 22nd, they bought 143.6 thousand. That was their biggest one. Now, how does this really work at all? This taught me to really just want to ask ChatGPT that question, why do stock buybacks work? Because Saylor does it, all these companies are starting to let me actually really look into it. And I'm sure you guys are curious. So why do these guys do the stock buybacks? How does it work? Well, stock buybacks are called shares and repurchases, and they happen when a company buys back its own stock from the open market. Companies do this for many reasons. It can boost their stock price, reducing the number of shares in circulation, which makes the remaining shares represent a larger piece of the economy. And then this will often push that stock to a higher price. And then it'll also return value to shareholders. Instead of just paying dividends, companies can give cash back to its investors through buybacks. So they just rebuy back the stock and do that in return. This also just shows confidence. Management may use buybacks to signal that they believe the stock is undervalued. It improves financial ratios. So buybacks reduce the number of shares outstanding, which can make earnings per share and return on equity look stronger. And it gives them the use of excess cash. If a company has more cash than it needs for growth or operations, buybacks can be a way to put that money to work. And then offset dilution. Companies that issue lots of stock options to employees sometimes buy back shares to prevent those options from diluting existing shareholders' ownership. So in short, buybacks are a tool to manage capital, reward investors, and influence stock performance. And yeah, I guess this is just their way to, though, acquire, give them more cash run, makes their stocks a little bit higher, and then they can do just more stuff with it. But that's why these companies and what stock buybacks do. Now let's take a quick commercial break, guys, and we will be back after these messages.
Attention visionaries and pioneers, the future of wealth is here, and it's spelled BITCOIN, Bitcoin. Introducing the exclusive Loans for Bitcoin program at the Bitcoin Men Crypto Club, where your good credit unlocks 0% interest loans for up to 2 years, or term loans up to $250,000 spread over 7 to 12 years. Why wait? Use this capital to acquire the world's fastest appreciating asset, Bitcoin. With prices hovering around 94,000 and projections aiming much higher by the year's end, the time to act is now. Leverage isn't just for Wall Street anymore. Arbitrage the low cost of your loan against Bitcoin's explosive growth. It's smart finance for the modern investor. And privacy matters. Our no KYC Bitcoin purchase program ensures you buy and self-custody your assets in your own wallet. Your keys, your Bitcoin, your future. And as the world shifts to digital currencies, be ahead of the curve. Front-run corporations, governments, in this greatest financial revolution of our times. I'm Jay Bose, CEO of Bitcoin Men Crypto Club. Call or text us today at 941-413-6920 and get started on that loan application. Secure your legacy. You will thank yourself tomorrow.
And we are back, bringing you some more cryptocurrency news articles to keep you informed on what's going on. And looks like we just got a nice little improvement to just our rules and regulation out there, because now writing code without ill intent is not a crime, says the USD official following Tornado Cash verdict. Now this is huge, because usually this would stifle people from just creating the new technology. It's like going, oh, what if somebody misuses it and then I'm in trouble because I'm the creator of it? So this has been seen with Tornado Cash, crypto wallets out there. It really affected the crypto industry. So taking this out, we may see some more improvements now and just more technology just come into play, because now it's like, oh, I can make this? Awesome, I'm going to do it because I'm not going to get in trouble if someone misuses it. And again, just because someone misuses it doesn't mean there's not good use to it. So again, maybe whoever creates this technology has good intent, but someone might use it for the other option. But let's go through this article. So writing code is not a crime, said one of the U.S. Justice Department's top leads in its criminal division, marking a significant departure in how prosecutors plan to view software developers in the digital asset industry. Now, Matthew J. Gialotti, acting Assistant Attorney General of the Department of Criminal Division, spoke at an event on Thursday hosted by the American Innovation Project, which is a new group created earlier this week. Our view is that merely writing code without ill intent is not a crime, said Gialotti. The criminal division will, however, continue to prosecute those who knowingly committed crimes or who aid and abet the commission of crimes, including fraud, money laundering, and sanctions of evasions, he added. Now, Gialotto's speech comes a few weeks after a jury in New York found Tornado Cash creator Roman Storm guilty of conspiracy to operate an unlicensed money transmitting business, which was met with disappointment from many in the industry. The DOJ alleged in 2023 that Storm violated a federal statute titled 18 U.S.C. 1960. Now, in operating an unlicensed money transmitted business, Gialotti addressed that the statute on Thursday, where the evidence shows that software is truly decentralized and solely automates peer-to-peer transactions, and where a third party does not have custody and control over user assets, the new 1960 B-1-C charges against a third party will not be approved, he said. So if there is criminal intent, there could be other charges, he added. But based on Gialotto's remarks, Storm cases should be dropped, said Jake Chervinsky, Chief Legal Officer at Variant Fund. Now, Roman Storm was just convicted on the exact charge under this exact circumstance, and Chervinsky said on Thursday in a post on X, justice for Maine means dropping the case. Now, the memo that came through is the DOJ has shifted its stance on crypto over the last few months. Under a new presidential administration and under the Biden administration, prosecutors took a more vigorous strategy toward digital assets. But under the Trump administration, the department released a memo that declares that the agency would not go after litigation or charges that would superimpose regulatory frameworks on digital assets with the President Trump's actual regulators. And this is to do work outside of the punitive criminal justice framework. Now, Gelato echoed that memo sentiment on Thursday. The Deputy Attorney General's memorandum recommits the department for those two bedrock principles, and the department will not use federal criminal statutes to fashion a new regulatory regime over the digital asset industry, he said. So this is really bullish news and just great for the crypto industry, blockchain industry, just everything. So awesome. I love seeing this. Now let's move on to our next article on State Street becomes the first custodian on JP Morgan tokenized debt platform. So real world assets are coming into play, and the banks already started onboarding it, getting ready for it, and looks like State Street becomes the first one under JP Morgan. So let's hear about this. State Street, one of the world's top 3 asset managers, can now custody blockchain-based debt securities for institutional clients. So State Street, an asset manager and custodian bank serving institutional clients, has joined financial service company JP Morgan's tokenized debt platform as its first third-party custodian, allowing it to hold blockchain-based debt securities on behalf of its investors. Now, JP Morgan's digital debt service platform allowed institutional clients to trade and settle tokenized debt instruments, which are security issued on the blockchain that represent government or corporate bonds. Now, the asset manager purchased $100 million in tokenized commercial debt from overseas Chinese banking corporation, one of the oldest banks in Southeast Asia, and in platform's inaugural transactions, according to Thursday's announcement. Here is that post from State Street on X. We're excited to announce that State Street is the first third-party custodian to launch on JP Morgan's digital debt service, bringing blockchain-based debt securities custodial clients. Learn more. Now we have Donna Milrod, Chief Product Officer, talking about this. The launch reflects a meaningful step forward in our digital strategy, where we manage a digital wallet on-chain and lay the groundwork for interoperability across blockchain networks. It combines institutional-grade infrastructure with emerging digital capabilities to meet the evolving needs of our clients. So institutions are finally adopting blockchain technology, and that is amazing news because it just makes things more streamlined. It makes their data immutable, can't be tampered with or changed. And so everyone's getting on board, and this is awesome. So State Street, founded in 1792, is one of the biggest 3 asset managers alongside BlackRock and Vanguard, with over $49 trillion in assets under custody and an additional $5.1 trillion in assets under its management. The asset manager is extending custody services to tokenize real-world assets, and it showcases the growth of the emerging sector and signals a milestone as more established financial institutions interact with the digital economy. Now, JP Morgan leans into the tokenized real-world assets as a sector records triple-digit growth. So JP Morgan launched Onyx, a suite of blockchain-based services and technologies in 2020. It rebranded the projects as Kinexys, its real-world asset tokenization platform, in 2024. Now, Oracle provider Chainlink announced a partnership with Kinex in May to help develop payment infrastructure for settling tokenized real-world transactions between financial institutions. In June, Kinexys, Chainlink, and real-world asset platform Ondo Finance completed a cross-chain transfer of Ondo's OUSG tokenized short-term U.S. Treasury fund in June, moving the digital asset between Ondo's Layer 1 testnet to the Kinexys permission chain. The Chainlink founder, Sergey Nazarov, told Cointelegraph that tokenizing assets on-chain increases capital velocity in the economy, and it also boosts the entire ecosystem by locking value on-chain. Now, here's the current overview of tokenized real-world assets, excluding stablecoins, and the source from XYZ. So we got the private credit sector, the U.S. Treasury's debt, and the commodities. So it just shows an increase in it. Now, we do need more high-quality assets on-chain, but we also need more frictionless payments that existing institutions can easily use, Nazarov said. Now, the tokenized real-world asset sector grew by 65% since the beginning of 2025, surging to a market capitalization of over $26.4 billion, including the stablecoins, according to the realworldasset.xyz website. So Yeah, so this is the first one of JP Morgan's custodial debt. We'll probably get more articles soon later on, not just about this. I hope we get more articles on just to get some updates on how they're doing. Is it playing out? Is it working? Is it so successful? Now we're getting more companies coming in. It's like we'll wait in here. But again, this is all the start. So grab your popcorn. This is just fun times. Now, let's continue on with some funny meme coin news. Looks like Kanye West, Yeezy, launches his Yeezy meme coin on Solana and then hits $3 billion before it crashes hard. So please don't be just jumping in on coins. Like if you do, just realize that it is going to be a pump and dump coin, especially by these celebrities. So if you get on it, be aware that it's going to dump, but you got to try to determine when you're going to get out. So if you want to play that game, all to you. I don't like it because it's too risky. But the launch was paired with announcement of YeePay, a payment processor, and the Yeezy Card, a debit solution. Now, rapper Kanye West, now legally known as Yee, has officially stepped into crypto on Wednesday, and the business mogul launched Yeezy, a Solana-based meme coin that briefly touched a $3 billion market cap within hours of its debut before rapidly shedding value. Now, the launch billed by Yee himself as the start of a new economy built on chain come just months after he publicly dismissed rumors of creating a token. Now, a new economy or a familiar scheme. The token's rollout has already stirred some controversial, with journalist Colin Wu sharing that data from GMGN trading platform, which allegedly shows that 90% of its supply is in the hands of just 6 wallets, raising concerns about heavy concentration and insider activity. Now, blockchain trackers also flagged suspicious liquidity pool setups with reminiscent of the Libra coin rug pull from earlier in the year, where developers retained disproportionate control of liquidity. And additionally, a Look On Chain reported that one insider flipped $450,000 worth of USDC into $3.7 billion in just hours, highlighting how early entrants capitalize on the privileged access. So yeah, like these huge gains could happen, but hopefully you can pull it before it's gone. However, even with the skepticism, Kanye star Powell shown with Yeezy quick list on CoinMarketCap while also securing exchange listings include BitGet. Furthermore, the officials introduced not only the token, but also YeePay, a crypto payment processor, and Yeezy Card, a debit solution aimed at everyday spending in the Yeezy and USDC coins. It also indicated that the supply breakdown allocated 70% to Yeezy Investments, LLC, and 20% to public buyers, and then 10% to liquidity with vesting handled by Jupiter Lock contracts. Nonetheless, the community's sentiment on the meme coin is split. Pseudonymous crypto trader DeFi Mochi warned that Yeezy's fully diluted variation between 2 and 3 billion was bad risk reward, given the fate of other meme tokens, while also pointing to suspicious timing tied to unfrozen Libra funds. Meanwhile, CryptoQuant CEO Ki-Young Ju drew comparisons to the official Trump token, which spiked after launch but later collapsed 88%, suggesting Yeezy may face similar trajectories. Now, the price action market outlook data from CoinMarketCap shows Yeezy hit an all-time high of $3.16 within its introduction, before tumbling 66% to just under $1, before briefly marking its all-time low of 91% or 91 cents the same day. Now, in the last 24 hours, the meme asset has dropped over 54%, with hourly swings as sharp as 31%. And at the time of writing, its market cap has nosedived down from its previous multiple billion-dollar peak to just sit around $349 million, according to CoinMarketCap. Now, traders have been both long and shortening the token aggressively. Spot on Chain reported one trader on Hyperliquid managed a 202,000 gain by shorting the token with leverage, while another repeatedly attempted long positions, racking up more than 159,000 losses. So it's a hit or miss with these coins. Some people are winning, some are losing. So again, that's why these coins are risky out there. It's like you got to understand, if you want to be a part of it, you got to understand the risk. Like somebody's going to get lucky. Somebody's going to be wrecked. And which one do you want to be? Like for me, I just don't want to play the game. I'll hold on to my Bitcoin because that's always going to be the winner. But with these meme coins, like if you want to take on that risk, yeah, you can see extreme gains. But if you do it, I just tell people, just assume you lost that money right then and there. So if you put money into it, it's gone, it's done, but you still have it. But you got to have the mentality that it's just gone already, because these are very risky and volatile assets out there. So just keep that in mind. And then also, I liked how this pointed out when you're doing research on these meme coins, again, look at the total ownership of the supply. They just said 6 wallets hold 70 to 90% of the entire supply. So that could definitely be internal schemes going on right there where they can totally rug pull the project right there. So keep a look on it. Like if there's like 10%, 20% that they control, then it's like, okay, this is in the public's hands. Let's see how this plays out. But take a look at the actual ownership of the coins out there. That's my final thought on that. Now let's move on to some crypto exchange articles. It looks like Binance is facing a mandatory audit in Australia over compliance concerns, which is good. We're starting to get more articles on like proof of reserves again, just daily audits, make sure everything's legitimate. So let's see when this is going to take place and what's going to happen. So regulators in Australia have found Binance falling short on key compliance standards, ordering a compulsory external audit. Binance Australia has come under the regulatory scrutiny for weaknesses in its anti-money laundering and counter-terrorism financing system. According to an official August 22nd release, the Australian Transaction Reports and Analysis Centre, AUSTRAC, has directed the local arm of the exchange to appoint an external auditor to assess and strengthen its compliance controls. Now, AUSTRAC cited several concerns, including limited scope in Binance's independent reviews, high staff turnover, and insufficient local senior management oversight, saying that the issues raised doubts about the adequacy of its anti-money laundering and CTF governance. The regulatory watchdog specifically noted that Binance's latest independent review was not comprehensive enough given the company's size, range, and services and the risks it handles. AUSTRAC CEO Brendan Thomas emphasized that operators must adapt their systems to local laws, implementing strong safeguards that prevent criminals from concealing illicit funds using digital currencies. Now, big global operators may appear well-resourced and positioned to meet complex regulatory requirements, but if they don't understand local money laundering and terrorism financing risks, they are failing to meet their AML CTF obligations in Australia, said the CEO. Now, Binance Australia has 28 days to nominate external auditors for AUSTRAC's consideration and selection. The exchange must also implement stronger controls, including robust customer identification, thorough due diligence, and effective transaction monitoring. Now, Binance Australia crackdown is part of a broader regulatory overhaul through the year, and Australian authorities have been tightening oversight of the local crypto industries in February. AUSTRAC warned crypto exchange and service providers to comply with anti-money laundering laws or face severe consequences. Now, at the time, authorities reviewed up to 50 crypto firms and took enforcement action against 13 for failing to meet its requirements, including canceling or suspending or refusing to renew their registration. Now, the government also recently released a framework to regulate crypto rechargers and stablecoin issuers, aiming to protect consumer and uphold market integrity. Now, AUSTRAC reaffirmed that beyond Binance Australia, all crypto exchanges must ensure compliance with local laws to avoid operational risks and regulatory penalties. And they should. They are centralized entities out there. They're the ones holding on to people's money. They're acting like banks. And that's why we say, don't keep your money, like you said in the beginning, don't keep your money in the banks or the exchanges, because if you don't hold it, you don't own it. Same thing. The moment you give your crypto over them, they're in full custody of it because they have the private keys. But not to your crypto wallet. They have their own, but you're willing to give handing it over there. So that's what's going on with Binance and just mandatory audits, which is needed. So way to go. Now let's talk about Coinbase. I got 2 articles for you. First, I'm just going to briefly mention that Coinbase did just add Trump's backed World Liberty Finance coin, USD1. So if you want to get that stable coin, it is now on Coinbase. So stablecoins are drawing fresh momentum in the United States as clearer oversight takes hold. And World Liberty Finance, a DeFi project supported by President Donald Trump, has added its USD1 stablecoin to Coinbase. The listing places a token alongside others widely traded on digital assets and on one of the most used crypto platforms. So USD1 is now on Coinbase. But this isn't the article I wanted to cover for you. The article I did want to cover was Coinbase tightens workforce security after North Korea remote worker threats. So the North Koreans out there, is it Black, or what is their company called again? Leviathan? Lazarus, the Lazarus group. I think that's the one they're going to be talking about. They pretend to try to get hired on as these exchanges, like security or backup, help, whatever. They apply for jobs at these exchanges just to gain access to people so they can scam all their hard-earned money. But it looks like Coinbase is now tightening their workforce security because of this. So Coinbase is reinforcing its security after a North Korean hackers exploited its remote work policy, with CEO Brian Armstrong outlining stricter and higher measures. Now, Coinbase, the world's third largest cryptocurrency exchange by volume, has come under a wave of threats from North Korean hackers seeking remote employment with the company. North Korean IT workers are increasingly targeting Coinbase's remote worker policy to gain access to its sensitive systems. In response, Coinbase CEO Brian Armstrong is rethinking the crypto exchange's internal security measures, including requiring all workers to have received in-person training in the U.S., while people with access to sensitive systems will be required to hold U.S. citizenship and submit fingerprinting. So they are really cracking down, but it's good. They have to. Now, DPRK is very interested in stealing crypto, Armstrong told Cheeky Pint podcast host John Collins in a Thursday episode. He said that we can collaborate with law enforcement, but it feels like there's 500 new people graduating every quarter. Now, from some kind of school they have, and that's their whole job. He added that some operators are coerced into working for the regime, and in many of these cases, it's not individual person's fault, but their family is being coerced or detained if they don't cooperate, said Armstrong. Now, Armstrong comments amid a wave of rising North Korean cybercrime activities beyond Coinbase. In June, 4 North Korean operators infiltrated multiple crypto firms as freelance developers, stealing cumulatively $900,000 from these startups. Cointelegraph reported on it. Now, the Coinbase data leak could put users in physical danger. Armstrong's new measure comes 3 months after the exchange confirmed that less than 1% of its transacting monthly users were affected by a data breach, which may cost the exchange up to $400 million in reimbursement expenses. And that was reported in Cointelegraph back in May 15th. However, the human cost of this data breach may be much higher for users, according to Michael Arrington, the founder of TechCrunch and Arrington Capital, who highlighted that the breach included home addresses and account balances, leading to potential physical attacks. He said, I am a longtime investor and champion of Coinbase. Something that has to be said, though. This hack, which includes home addresses and account balances, will lead to people dying. It probably has already. The human cost denominated is in misery, and much larger than the $400 million or so they think it will actually cost the companies to reimburse people. Now, the consequences to companies who do not adequately protect their customer information should include, without limitation, prison time for executives. Very disappointed in Coinbase right now. Using the cheapest option for customer service has its price, and Coinbase customers will bear that cost. Now, among all United States crypto firms, the Coinbase brand was most impersonated in phishing attacks in 2024 and fraudulently used across 416 reported phishing scams in the 4 previous years, according to MailSuite reported shares with Cointelegraph. And here's just an image of the phishing scammers impersonating the most. And yeah, Coinbase is the highest one, but they got Amazon out there, Apple, Microsoft. They impersonate big names out there because, again, most average people have one of these accounts, platforms that use one of their products. So, like, by using these big names, like they're I'm picturing like a dartboard, like they're expanding their dot, like their center dot. It's making it bigger. It's making it easier because, like, if they use like a tiny name platform, that dot's tiny of them like sending a phishing email out there and hoping they click on it. Because that person goes like, I don't have one of those accounts. But if you use like a big name like Amazon, eBay, Apple, that dot becomes bigger. So if they just send a random email out to somebody pretending to be these guys, most likely the guy may think it's actually them because it's like, oh, I do have an Amazon account. I got to get in there. So they just try to spread fear, like extreme fear and fast, making them want to transact right away. But accounting for all U.S. brands, Facebook parent company Meta was the most impersonated brand by scammers, appearing in at least 10,457 reported scam incidents. And the U.S. Internal Revenue Service was the second on the list, having impersonated at least 9,762 scams. So scammers are going to scam out there. Just be aware. Don't click on links. Again, it's really hard to learn. It's like you want to click on everything you get when you get an email. Like, honestly, like 50% of the time, the email could be scam or just useless junk mail. And it's just like, how do you just learn to just like not just delete everything, don't even care about it? It's like, that's how I am. It's like, I really want to use the email for messaging myself or just verifications if I need to do something. But it's just like, when I do the transaction and stuff, I get that email. I know that's me. If one just came out, like I'm here doing the show right now, and an email came in, oh, someone tried logging into your Coinbase account. I wouldn't bat an eye on it. They didn't get in. I'll go on my Coinbase account on my phone right then and there, not clicking on any links, and go, no, I'm still fine. So again, you just gotta learn to ignore that, and then you should be filled. Don't get so freaked out, because again, that's what scammers want you to do. They want you to freak out, not be in the right mindset, and then do something you normally wouldn't do. So just be careful out there. Now, speaking of potential scams to come along, we have some news about Apple patching a zero-click exploit threatening crypto users. So Apple users, including me, but I can't even do the update anymore because my phone's so old. But if you're an iPhone user, iPad user, or MacBook user out there, you may want to pay attention to this article. But Apple patched a zero-click vulnerability that allowed sophisticated attackers to compromise devices and could have led to cryptocurrency theft. Now, it urged immediate updates. So hopefully this is a legitimate article. I was just talking about urging like immediate updates. Do it right now. And I always say when it comes to like actual updates, give it a week to make sure there is nothing wrong with that update. No one's being scammed out there, but this is supposed to be an update to prevent a scam. Nobody's been scammed out yet as far as I know, but Apple is warning us that we should probably do an update just to be sure we're safe. But Apple is urging users to immediately update their devices to patch a zero-click vulnerability that allowed attackers to compromise iPhones, iPads, and Macs, a flaw posing heightened risk for cryptocurrency holders. In a Thursday advisory, Apple said that the image processing vulnerability allowed sophisticated actors to compromise Apple devices. The vulnerability disclosure page notes that it was fixed as part of the macOS Sonoma 14.7.8 update, the macOS Venture 13.7.8. We have iPad OS 17.7.1, macOS Sequoia 15.61, iOS 18.62, and iPad OS 18.62. Man, there's so many devices with different updates I would link with it, but those are the updates that should be happening. But Apple is aware of a report that this issue may have been exploited in extremely sophisticated attacks against specific targeted individuals, the company said. And cybersecurity experts warn that the flaws is particularly dangerous for those in crypto, since they are significantly more exposed to cyber attacks. Now, access to crypto integrated systems can lead to financial gains through irreversible transactions for attackers, resulting in highly motivated actors targeting this category. Now, Giuliano Rizzo, founder and CEO at cybersecurity firm CoinSpec, told Cointelegraph that this is a zero-click vulnerability. Now, that does not require user interaction and an attachment delivered via message, and can just be processed automatically and lead the device to be compromised. Now, attackers could potentially leverage access to the device to reach a wallet data. Now, Apple vulnerability details that the vulnerability affects Apple image I-O frameworks, which allows applications to read and write most image files formats. And due to improper implementation, processing a malicious image allows for out-of-bounds memory write access. So in other words, attackers can leverage this vulnerability to write to areas of a device memory that should be inaccessible. Now, such an issue in the hands of particular sophisticated attackers can compromise device security by allowing attackers to execute code on targeted devices. Now, a device's memory holds all the programs currently being executed, including critical ones, being able to write to memory outside the authorized scope, and allows attackers to alter how other programs operate and execute their own instructions. Now, advice for crypto holders. Rizzo advised high-value targets who use vulnerable devices for key storage or signing to migrate to new wallet keys if there is any sign of compromise, or if there's any evidence of targeting on the device storing the credentials. Now, the exact steps depend on attack specifics, but the key is to stay calm, document a clear plan, and start by securing primary accounts, email, iCloud, and that attacker could exploit for password resets or further access. So patching is critical, but waiting for updates to finish should never delay immediate account lockdowns. Now, for average individuals, Rizzo noted that checking system logs could in theory show anomalies, but in practice, this data is hard to interpret. He said that vendors like Apple are well positioned to detect the exploitation and then contact victims directly. So just be aware of this vulnerability that happened right now. So if you want to do the update right now, go for it. I tend to just wait a week again after I hear the news before I will do an official update. That's just to play it safe out there. But again, nobody has been clicked yet, but yeah, so So I guess what this is saying, like usually there's an option on your phone where you can hover over an image that has text on it, and then you can like choose the option to get the text outside because you want to copy what the words are in the image, but it's like, oh, how can I copy that? There's no right click, it's just the image. There is a thing on your phone where you scan over the image and it'll put the words in plain text for you. But I guess that is where the vulnerability happens because again, that data goes into the memory and could compromise all the other programs. So just be careful if you're using that specific tool on the iPhone or your Mac or iPad. But that is it, though, for all the news. Long show today. I'm glad you guys stuck around for it. Let's see where we're at with our fear and greed index. We are currently sitting at a 46 neutral right now, so we're still in neutral territory. I think that was a little low from yesterday, but I bet like later on today, because this updates every 24 hours, I believe that we will see more this range go higher because, again, prices are kind of booming right now. Ethereum's at 47.50, Bitcoin's back at 116, XRP $3. What's going on there? I think I've been seeing some articles out there. It's like, is it over? So people are starting to question XRP. I do notice that some people are taking some of their profits right now because they're unsure what's going to happen. Because again, when you're trying to take profits, you want to do it before everyone else is doing it. So we're getting some people already doing that in the XRP community. I've helped a couple of guys just like do what they say they want to transfer out some money. How do they do it? I help them out, show them how to do it. But they were saying like, yeah, I bought it at 30 cents. So the people who bought in like early on around that price range, they're going to take some profit. Now they're not selling all, that guy wasn't taking all of his coins out there, but just some of it. But he's just one of many people out there. So guys, I hope everyone enjoyed the show today. And again, if you're in the Sarasota area, stop by our club tonight. We're having poker night. So it's always fun to play around, end our week. And so kind of the last week we can say that it's a great way to end the week before the weekend because I believe we're starting to be open on Saturdays, either starting this week or next week. So I guess it's not the best way to end the week, but another just fun activity here to do at the club. But everybody have an awesome weekend, and I will be back on Monday with more cryptocurrency news articles for you. So take care. Peace. Love you. Bye, guys.
In a world where your data is constantly under attack, one company stands for your digital freedom. Introducing Calyx Solutions, your gateway to ultimate online privacy and secure cryptocurrency trading. Meet the Liberty Laptop. With its modified OS and advanced tracking prevention, it's your shield against surveillance. Access restricted areas, use recommended security software, and browse with confidence. Your digital footprint? Virtually non-existent. For the crypto pros, we present the Crypto Laptop. Pre-configured on premium hardware for secure trading. Optimized for your favorite wallets and exchanges, it's the fortress your digital assets deserve. Both laptops come with expert individual training and support. You're never alone in your journey to digital empowerment. At Calyx Solutions, we put you in control. No more worrying about data breaches or compromised transactions. Ready to join the revolution? Visit calyxsolutions.io and choose your perfect laptop today. Plus, become an affiliate and earn while sharing the power of digital freedom. Calyx Solutions. Unlock your digital freedom. Give us a call or text at 702-845-8276 or visit us directly at calyxsolutions.io.